Welcome again. This video, I didn't expect it would take this much time. I thought I would just read the slide and show a few examples, and in 30 minutes I'll be done with all. I didn't know that it would take more time than Envy said. So let's continue with the MACD. So also to deploy the MACD, you want to go to your indicators tab and then type the MACD. So here I'll be showing you just a crossover and the divergence, how you can use the divergence. So here, what do you exactly have? This is a MACD. When you highlight over it, this is a hide and no hide. That is the settings. This is the default settings. This is a fast, which is a MA. It's used in calculating the length of the MA. Fast length 12 and the slow length 26. And the signal smoothing, total number of days to calculate this on 9. See, simple MA you're selecting. They have even more features here. Then simple MA signal 9. You can enable all this, but let's just leave it as it is. Then here you can style it. You see the histogram. The histogram is the one in red and green, just like we have on the volume. The MACD line is the blue line, which is the fast line, and the signal line is the yellow one. So you want to see the fast line, the fast line, which is the blue one, the MACD line. You want to see it cross above the signal line. So like we have a crossover here. What do you want to do when you spot this crossover? You want to look for buy, and if you are bought here, good profit. Then once it crosses below, what you want to look for? You want to look for sell. But in this case, if you are sold, the price it's a fake call, as just few candles after it crossed back up and then it rallied up. Then it crossed below here again. Here it crossed below. If you are taking the call the moment this crossed below, it is another fake call. And then here we have them interacting with each other. Then a final crossing under here, and then we saw price coming way down. Here we have the cross above again. And what do you notice at this particular crossover? If you were to enter on close of this candle at this particular moment, for the next few candles you will be in loss. I don't know where you will have placed your stop. That's a personal choice. I've discussed how to place stop on another video. That is the invalidation video, so you can watch that. But if you place your stop below the entry candle, you will be taken out. If you place your stop below of this range candle, is it not too far from where you want to place your stop? Because if you enter here, the profit you won't be taken out at this point, but will you be on your one-to-one profit at this particular time? No. So you want to consider all that. Another way you can use to enter is divergence, like I showed you on the RSI video. You can have divergence. Let me go back to another time frame. You can have divergence on these time frames as well. Here now, see the market drops from this high, but we had the cross below at this point. This was before, this was after the cross, which means at this particular candle. So if you are to sell the moment the MACD cross below at this particular candle, which is at the close, you will be in loss by now. If you are not stopped out, if you place a stop loss just above the entry candle, which is here, you'll be stopped out. And then MACD is still showing bearishness, but then price is moving up. So that is why these indicators are lagging. Sometimes they give you early entry, while sometimes they give you very late entry, which traps you into the market. So how again can you trade successfully with MACD? As you can notice here we are the cross below or cross under, and if you short, you have no profit. Market basically range, and then here it took off. But before it took off, what did we see? We saw the cross over. even up to this point, if you had entered even up to this point, you still be in a lot of profit. This is one of the advantages, and this is one of the disadvantages, where it gives you late signal, whereas here it gave you very early signal. So you just have to find a settings. If the settings of 12 and 26 is not working for you, you can divide it into 2 and say 12 and 6 and 13. You see, it's a bit different now. Now we have this crossover now. This cross under at this point here. So if you are sold there, you will be in profit. But if you have used the default settings of 12 and 26, this is where you would have sold and you'll be in loss. But this settings is more short term than the other settings. If we even make it faster, let's say 3 and 6. Now, where do we have this cross under here? We have it on this particular red candle here. So if you sell on close of this, you will still be in profit because your stop loss will be just above here. You will be in profit. And you might have taken profit, or you might have given it back to the market. Then what do we notice here? We see another crossover here at this particular point here. And what happened at this particular crossover here? It is here where you will have seen, because this was a particular crossing candle. It wasn't confirmed at that point, but it was confirmed at this point. So if it was confirmed just on close of this one, you will be in little profit, but now you will be like break even. So you will still be in the market and waiting to see what is going on. So, but sometimes for a longer time, the default settings are just okay to work with. If you look back into the past, see here, we have this crossover here, and the moment you buy around this region, you'll be in profit. You won't be taking out on this, you'll be in profit. Then we have this cross under here. If you sell as well at this point, you also be in profit. You cash out this move. So these times they are working quite well. Here as well, we have a buy signal at this point. Let's see what happens. Okay, we ended up not getting taken out probably. If this was your buying candle and you have your stop just below, you'll be taken out. But if you have your stop a bit distant down, then you'll be fine. So the other way we can look at MACD is using divergence. This is a histogram. The histogram is the momentum at which price changes. That is the speed. You can calculate divergence on the MACD itself and on the histogram. Most time people prefer to use the histogram. Now look at this. There is a divergence somewhere around here. I don't know if you can spot it from the RSI class. Okay, we have this price coming, making a lower lows here. Either you use the lows, if that is what you prefer, then you will have to set MACD to take source from lows or highs and not close. But when you set it to close, then use the close of the candles as well, so it becomes more accurate. So here we have a lower highs, lower lows. This low is not at this, so we have a lower low. Then looking at the MACD histogram, this move here is reminiscent of this move here. Why this move here is reminiscent of this move here? And what do we have here on the histogram? The histogram is the speed, right? We have an higher high, which means the speed at which price was dropping here is not reflected on the MACD histogram. It dropped way here, but here dropped with larger speed or larger momentum on the price, which was not reflected here. That showed an anomaly. And when you spot an anomaly in the market, what are you supposed to do? You are supposed to wash, right? You are supposed to wash out. Some people will then immediately start placing buys or bids. Even if we continue going down in price and the MACD continues giving us divergence, but some people will wait for the first green candle, green column here to print. The moment it prints here, that is when they want to buy. That shows that the momentum has shifted from the downside to the upside. The midnight on on the MACD, which is a 09, which is around where the histograms are plotted, is the mid-range. Once price is above it and the MACD signal itself and histogram is above it, the market is bullish. Hence, you see the green. The deep green means a lot of momentum, while the lighter green shows that the momentum is reducing. Are you getting it? The momentum is reducing. That means price is becoming weak. Even though it can become weak, like we see here, it was showing that the momentum was less, then the momentum came back here, only for it to become less again. And what happened? It became bearish. The MACD itself didn't cross under the 0 line, so the market is still bullish, but the momentum has gone bearish as the momentum has weakened out totally. So what do you want to look for? You want to look for divergence again. Let's see if we can get a divergence on the MACD itself. So I'm looking. Okay, I think we have some here. I see price making higher highs from here, this point to this point, just like we had on the RSI. And this side here is a high here, right? It may not be exactly the point, but just look at the area. This area, this side making area is this area here. And then look at this, it's this area too. So we have a lower highs on the MACD, whereas we have higher high on price. This is reminiscent of the RSI. You can just wait for a break of this, or you can wait for MACD to cross under the yellow line. You want to cross under for this MACD to be clear. The one that happened there is not clear enough. It's not clear enough. Once it's facing down like it did here, even though this one faced down, the price didn't quite move downwards like you would have wanted. Then, even though you can even find extended divergence, this point to this point, it doesn't have to be one particular point to the next point. It can be over time. Like we have this point making a lower low here. This height is higher than this, right? But here we have a lower height. And from this point to this point, we have an higher high. That is still a divergence. If you go onto an higher time frame, this might just be one. Let's see. Okay, here now we have this high making a lower high here, which is here and here. But here there was no divergence anymore. If you notice here, this point to this point, higher high, which is this point on a higher time frame to this point, there was no divergence on the MACD. Where did the divergence came into play here? If you notice here, we have this and this. Either this is a double top or a slight higher high. Even if it were to be a double top, the fact that the indicator is not showing the same thing means there is an anomaly. So we have this side, which is this, to this, which is this. And what did you notice the moment this divergence formed? Let me remove this. You notice a cross under, that the cross under has even occurred. The cross under has occurred. It was trying to make a cross above of the MACD to continue bullishly, but then it made an higher high by close. Even by highs, it still made an higher high here. So it made an higher high here, but the MACD wasn't reflecting that. And then the MACD couldn't cross above the signal line, only to crash down. So seeing this cross and then seeing the confirmation of this divergence is your entry signal. You can look for divergence on either the histogram. You can also find confluence, looking for divergence on the MACD and divergence on the histogram. And if you look at the histogram here you have this size here, right? You have this histogram height here. Where is the high you want to draw it to? And it should be somewhere right there, right? But the high has gone lower. And for the fact that it has gone lower means the momentum from this rising is reduced. The momentum is negative. The speed of this rise is 0. That is another confirmation that the moment this divergence formed here, like a double top or a slight higher high, and then MACD is showing that, and then MACD has crossed below, is your short signal. Let's see if we can get some more examples. Let me go back to a lower time frame here for more precise examples. Look at what I'm saying here. I think this is higher than this and higher than this. So let's see what price has to do or has to say at this point. So this side, which is this region. Oh, I'm looking at lows. Oh, okay. Here this lows to this lows was lower low, right? Then even to this low was lower lows. Good. Now look at this lows here. To this point was lower low. To this point was even a lower low. This low is lower than this, lower than this. Why this lows here is higher than this, higher than this? That is divergence. And the moment it happened, and the moment this cross here, what happened? It showed that the momentum has shifted to the upside, which means we want to enter on this candle, but then it was already late. But the moment it was fading out here, if you are taking the risk and bought, you will be in little profit. But then depending on where you place your stop, risk management is very essential. Stop placement is very essential. On the print of this green histogram, you can still buy, but in as much as you give a distance to your stop, you will be in profit, all these profits. You wouldn't be taken out. That is the thing. And then, or the moment you start seeing these divergence, if you are watching, as the first you see this one, okay, you are watching for a crossover on the MACD. You do not see it. It tried to cross over here, but it didn't happen. You have another divergence here, then you are watching for the crossover again, and then you got it just at this green candle as well. The moment the momentum shifted to the upside was when the MACD crossed, and the price, you have already left profits behind. That is why these indicators are lagging. So here, if you have taken your entry, where it's giving you to take entry, you will be in, but depending on where you place your stop, that is what will determine if you are still going to be in the market now or not. So that is it. Let's look for more examples. We have a cross under here, and what did we notice here? We have this side to this making a lower highs, right? That is pure divergence. Let's see if it's happening on price. We have the close here. It's just slightly above, right? Just slightly. Even if it were to be a double top as an equal highs, but this not reflecting an equal highs is still a divergence. And the moment you spot your divergence, like I said, you want to look for a cross under. And you have your cross under here, which is on this candle. So you short, you still be part of this long profit. That means you have your surplus either above the entry candle or above the range here, and you will still be in profit. Even when it came down here, you have the chance to take more profits the way it keeps making the sideways movement. But then you don't want to hold on to the market for too long, because you never can tell when the market will turn. So if you are not looking at the crossover, you want the divergence on MACD, you also want the divergence on the histogram. Do we have that on the histogram? This is the histogram highs, and then this is the second one for this second high. There is another divergence there, and then the moment it shifted, the momentum shifted to the downside by printing this red candle or this red histogram bar. Is the same time MACD cross below, and that is the same time you want to go short. That is your entry signal. Are you getting it? So you can play divergences on the histogram, you can play divergence on the MACD, you can even play the divergence with the crossover, either on the MACD or on the histogram. So this is a very powerful tool. The only bad side is a lagging nature, is a lagging indicator. So due to that, you are meant to get late signals at times. Okay, let's quickly go and look into stochastics. Notice here we have stochastic RSI and we have the stochastic itself. So let's just play the stochastic itself. As you can see here, we have like the MACD and the RSI combined, because we have the overbought region, which is from this 80 points, 80 mark to 0, I mean to 100, and then the oversold from 20 to 0. So one price or the stock lines are on the overbought region, you want to start looking for sell, and when the stock lines are below the 80, I mean below the 20, which is the oversold region, you want to start looking for buys. Another thing you can do is, once the stochastic is in the oversold region, you want it to cross above the signal line. Let's look at the settings on this. We have K, D, and smooth, which is 14.33. This is like the RSI on it. So 14 length and 33. You can change this 33 to suit whatever you want, but that is the default settings. You can play with the numbers to suit your own needs. If you want a very short trades or you want a long trade, all these are all selectors. So the moment stochastics became oversold here, which is the point you want to start looking for buys, right? If you start buying the moment it became oversold, at this point here, what happened? It came into the neutral region, but not much profit, only to come crashing back down. But look at it here again. If it became oversold there right again, and then it crossed over, assuming you bought the moment it crossed over right on this point. It's like it even gave an early signal than the MACD. So if you had bought the moment it closed, the point you're going to buy is not the very moment it's crossing, because you wouldn't see that particular moment if it's crossed or not. So the candle would have closed before you see it as crossed. So which means it crossed right on this candle. Either you want to take it on open of this candle or on close of this candle to confirm full crossing. Then you will be in this profit, and you will still be on a profit up to here, because your stop, when you buy here, your stop will either be here or here. And then it became overbought here, and then it crossed on the right here, which means on this candle, if you are sold on this particular candle, you will be in little profit up to this extent. And the good thing here is, if you are playing the crossover, the moment it crossed below here, you sold. The moment it crossed back above here, you buy. So here you might break even, or you might sell at, or you might come out at little profit. Then if you have bought here again at this point where it crossed over, and then it crossed under here, if you are sold, it's still giving you some little profit, so you are catching little movement. This can be good for scalping, but then you want the settings to be correct as well. Here again we have it crossing under, which is at this point. Okay, you will notice it at this point. So if on close of this candle you sell here, you will be in profit up to this point. This point was whipsaw. You didn't get a clear crossover. Or then here you have it going to the oversold region and crossing back. So you want to sell what you have sold at this point. Here, that is little profit. And then you may want to buy again here. That means you bought at this point, which has given you some little profit, only for it to come down. So sometimes they give fake signals as well, but they are still a bit leading than MACD. Likewise, you can find divergences on this coin as well. On this indicator. Let's see if we have a divergence. I think I spot one already. These things take practice. Once you practice with them over time, it will become easy for you to understand. Now we have price making higher highs here, right? Then let's look at the indicator on that particular trading day. We have this side to this side. So these 2 points. We have this side to this side. What did we see? We see a divergence. Price is making higher high, whereas the indicator is making lower highs. Then you get another cross below here, or you get a cross below here, which is your entry signal. When you are looking for more than one thing, if you are looking for just divergence, you know, like on the RSI, I said wait for the lows of the divergence, which is here. So if you are to wait for the for stock to close below the lows of the divergence here, it will be too late because that is here. You will be entering here. You will still be able to catch this profit, but sometimes it won't give you that. It will just, because it's too late, it's deep inside of it, even below the 50 mark, it will just come a little down with no profit and then come back to the overbought region. But the moment you spot the divergence here, same as in the MACD, then you are watching for the cross under. The moment stock crosses under, which is the blue line, crosses the yellow line, then you are looking at a candle for sell, placing your stop just below, above. Let's see if we get another divergence. This point to this point, we have lower highs on the what's it called, indicator, but here it's still lower high, so no divergence at that point. That's a bearish divergence. Bear in mind that all those hidden divergences, they do show here too, so you have to be watchful. Okay, at this point to this point is higher, at this point to this point is higher, so it's all fine. Now I think we have a hidden divergence here. Now remember, hidden divergence, price making higher lows, whereas indicator making lower lows. Here we have the indicator making a lower low here, clearly, right? Now let's look at price, what price is doing there. We have this region, is this region, this low. What is price doing here and to this region, like this region, is higher lows. That is a hidden bullish divergence. So you want to look for a crossover the moment you spot this hidden divergence, right? That is here. So you want to long on this particular place. But then where you will place your stop, definitely above here. I don't know if this candle that is forming right now would have taken you out or not. But then you wouldn't want to mind, because it can just choose to cross back above the way it happened right here, or even right here or right here. But you have an hidden divergence here. So that is a buy signal. Indicators are lagging, so you have to play around with these indicators and try to get the best out of them. Let's look. I'm looking for a price where we have a lot of price activity. So here you're looking at the lows. As price is coming down, you are looking at the lows. When price is rising, you are looking at the highs. Sometimes price will drop without divergence. Divergence is not the only thing that pushes price up or down. So you have to know that and know peace. So if you spot a divergence, it doesn't play well instantly, no problem. And if you see price coming down without a divergence, and because you are not in it, if you are not in this trade, you'll be in another one. Do we have a lower low here? I think we have double bottom here on the indicator. We have these lows. We have these lows to this low, either a slight lower low or a double bottom. Whereas we have price making higher lows here. That is clear divergence. That is clear divergence. So what do you want to look for? You want to look for the crossover. Notice one thing. The moment this indicator was here, it was making an higher low to this low, right? And price was also making an higher low wherever it is, wherever that point is. This point here, okay. Price was making an higher low here, higher low to this low, right? Indicator was also making an higher low to this low. But price then came down here. What do they see? We saw indicator making an equal lows or a lower low. Let me see that clearly. I think it's a lower low. Exactly. I think it's a lower low. You can just see that slightly. I think it's a lower low. This is a low. Exactly, it's a lower low. It's made a lower low. So that is a divergence on its own. Then, the moment you spot this divergence, it has formed. What are you looking for? You're looking for the cross, which means you get it here. This is a candle that cross, but you won't see it here, maybe until the close of this candle. Or maybe it can show you on the open. But the moment you see this cross, that it has happened, like this was a crossing, it won't allow me to align that particular period. But I can align just before, which is here, and just after. So the just after is where you want to long, which is either on close of this candle or mid-range of this candle. But you want it to be confirmed, so you want it to wait for the candle to close and you see it has fully crossed before you long. And then if you have your stop just below it, you will be in this profit. You have nothing to worry until much later. But then it should be out already, because if you long at this point here and you have your stop here, it crossed back below here. So either you have sold there or you want to wait for divergence to form again before you sell. And did we get a divergence forming? Let's see if we get a bearish divergence. We have this to this side is an higher high. This is higher, this is also higher, this is higher. So it didn't give you a divergence here. Even this I say is lower than this and this is lower than this. So after longing here, you didn't get a bearish divergence to sell. But you can choose to sell when you think you are in enough profit. That is one of the disadvantages of these indicators. Sometimes when it's supposed to give you profit, it will give you little profit and then cross back under, which is telling you to sell. And sometimes it won't tell you to sell until it is much late, after you are giving back to the market all you have made in profits. So that is stochastics, and that is it about the momentum and strength indicators. We have discussed the RSI, the MACD, and the stochastics. There are also other indicators that does the same thing, either using the cross over and cross under, oversold and overbought, or histogram. You can also find many other indicators. Let me see. I don't want to take much time. This lesson here alone is taking a lot of my time. This is a stochastic RSI. It is just this is virtually the same, but this one, the way it's calculated, is also different. Here we have KD, RSI length, stochastic length, which is 1414 and 33. So you should play with all this and see which one will give you the best entry and exit signals based on your trading strategies or your trading styles. You have to play around with this. Just sit on the chart, deploy one of these, look at what happened when the price crosses above. If it crosses right on time or it was late, then look at what happened when it crossed below, which is telling you to sell. Or if you want to, just find a way around it. Find a way to work around it. There are also many strategies at which you can use this. You can also combine it with MACD. You can combine, that is looking for confluences. You can combine the indicator with MACD or with RSI. So when you have, maybe MACD is giving you a divergence, you want to see if this one is also giving you a divergence. That is one of the ways to use it for confluences. Or when, let me see if I can get a divergence here. This one I see price making like double bottoms there, but then here is price making double bottom. I think so. Here is giving me a divergence on both the histogram and the MACD. We have these higher lows and these higher lows to this. Here I'm not exactly sure. Okay, it's also a bit of an higher low or double bottom. And price is it giving me a divergence? The close of this seems to be higher than this. So this price is not exactly clear. Let me see. We have this close here. Okay, this is higher. Because of this, we have to take this lows as this. But on MACD, this is the low. So here we have it making higher. So there is no divergence because this close here is higher than this close here. So no divergence at that point. So those are the things you want to look at. Let me go on to the 4 hour and see if I can catch one quick thing. There is divergence on Instagram here to here to here on a MACD, and here to here we have higher high in price, and on here do we have a double top, I think. Yes, we have a double top here. This top to this top is exactly the same. Why this top, which is a high, is similar, right? It doesn't have to be exactly at the same place. It can be at the exact same place. And then MACD histogram also is making lower highs. And what is price doing from here to here is making higher highs. So price is making higher highs. This is making equal tops. This is making lower highs. This is making lower highs. That is 1, 2, 3. 3 confluences. That there is an anomaly in price here. So price is preparing to come to the downside. And then if you are taking the crossover here, you'll be in little profit. But then if you watch MACD, at this point you wait for MACD to turn red before, you'll be in loss. But then that is why these indicators are lagging. But then if you combine to this point, you will be in profit, which is here. Or if you wait for this point, you'll be in profit. So sometimes you have these signals which can give information overload, like it just did to me right now, because MACD was telling me I have a divergence. I was waiting for this, and then if I have shorted, or the moment I didn't see a clear cross under here, so I want to wait until like something like here to see a clear cross under. But then Stochastics, the moment it's crossing here, it's crossing with good force here. You can see nobody will say this won't drop hard. So Stochastics might swing your buyers to go short, whereas MACD histogram is still bullish at that point. At the point is crossing below, MACD histogram is still bullish, as in it still has a lot of momentum to the upside. So it's telling you there is divergence, but then MACD is also telling another story with its histogram that there is a bit of momentum, even though there is divergence. But then Stochastics is telling you to go full-blown short. That is where information overload happens. We have to proceed in another video. So we have to proceed onto the volume indicator. This will be the volume indicator will be very short because I already talked about volume and price analysis before in a previous video. So thank you for having the patience to watch all this series, guys.